Time to spotlight FedEx. We're taking a look at this. So climbing more than 55%. You see what I mean? Right? New 52-week highs. Earnings headed our way next week, and it's had consecutive days of gains. I know it had 10, maybe. Scott Bauer, CEO of Prosper Trading Academy, from the Schwab Network Chicago studios. There you are in person. Thank you for being with us. I read last week how it was up 10 days in a row.
Yep.
I haven't kept following it. Did it have even one down day? What's going on here with FedEx?
Yeah, huge rally. I think a lot of it, Nicole, is people trying to get in prior to earnings, which is just ahead of holiday season. But that's what concerns me the most, right? Is that they may have a cautious outlook based on the consumer. From all of the trends that I'm reading and the concerns that I personally have about the holiday season, it all rests with the consumer. And if the consumer is pulling back at all, not just on what they're buying, but even how much they're shipping, that is obviously directly going to affect the likes of a FedEx, of a UPS. Now, you can look at this and say the trend is, decidedly bullish. Like you said, they had those 10, 11 straight up days in a row. Nice gain for the year. I am definitely cautious ahead of earnings next week because of the consumer.
Yeah, and when you look at when you bring in Amazon, UPS, you're talking about consumer behavior right now. We've seen them spending, but they're very, pinching the purse. So what do you think about some of these other names to watch, too?
Yeah, let me point out one other thing in FedEx is actually we have seen analyst expectations downgraded over the last several weeks. You typically don't see that going into an earnings report. So that's another place for caution. If you look at the space overall, I am not bullish on the space, whether it's FedEx, UPS. Amazon, I think, is a little bit different because, it's not just the shipping end of it, it's AWS, but I'm very, very cautious on retail and retail-related stocks because I think the consumer is having a real difficult time right now.
Okay. And then what about Palo Alto, which is at new all-time highs here? And I see JP Morgan maintain an overweight, raise the price target up to 326, up from 272. That's a nice call out right there. Of course, 272 is old. It's at 310, so they had to do something. 326 is the new target. So what do you say on this one?
Which that target is not so far away from where we are. But if you remember, I sat with you a couple weeks ago on the floor there, and we talked about Palo Alto right after earnings. And I said, this thing is a strong buy. I love this stock. This is when the stock was down around 240. I think cybersecurity, Nicole, is probably the one sector that has the most opportunity in 2024 and beyond. And when I look to a sector, whatever it is, I always look to best in class. Palo Alto was one of them. A CrowdStrike would be another one in that space. So I think there is a lot of upside. And one of the reasons I really love Palo Alto is because of AI. Now, AI, we know some of the good with AI, but there's also a lot of bad with AI in terms of nefarious work out there and breaches. And I think that is just starting, and we are going to see more and more and more of that. Palo Alto is the company out there that you need to be in to combat some of that.
All right. Thank you so much, Scott Bauer, Prosper Trading Academy. Thank you for that.